we already have with us Gonzalo Cañete, in this case, Head of Global Market Strategy for ATFX Connect. How are you? Very good morning, Gonzalo. Good afternoon.
Good afternoon. How are you?
Very well. Tell us a little bit about the movements in the markets, how investors have taken this U.S. inflation data, this respite for Powell. Are we breaking new all-time highs? It shoots up. We have seen a significant rally in the S&P.
Yes, indeed. And in fact, on the diagnostic, I publish every morning the report, as I always remind the audience tonight. In addition, we will also comment on it at the close of Wall Street here on Negocios TV. But basically what we said was a relatively soft or positive inflation data that comes out relatively smooth or positive, it benefits. There is a key issue that I want to highlight, Sergio, before it takes up unnecessary time. Let's comment on one thing that I think is very interesting for the audience. Yesterday we had, in addition to Powell, we had Klaas Knot, the president of the Dutch Central Bank, who is a member of the European Bank Council, also giving statements minutes before Powell. And one of the things that caught my attention and that I was commenting on this morning in the report is this. He says policy divergence could weaken the euro and feed through to prices. Higher temps for longer by the Fed could lead to a slower pace of rate cuts by the ECB. This is key because it is telling us, mind you, that if the Fed doesn't cut interest rates, we may not be able to cut them, or we may not be able to cut them at the pace we want to cut them. And I was just listening to the previous analyst who was predicting me, the fellow saying that this would benefit an ECB rate cut ahead of the Federal Reserve taking the initiative would benefit German farms that are in dire need. That is to say, Europe needs to cut rates, needs to raise the pressure that it has of financial costs, mortgages, credit, everything, because it is in recession. Let's make it clear. Germany has a GDP yield that has been practically flat since the middle of the year 2023. This is a reality. Therefore, they need to cut rates. But the question is, and here he was giving the key, and we were commenting precisely on this. If the ECB cuts rates, the euro will weaken with respect to the dollar, and therefore, yes, it favors European farms. But a priori, what it will do is make oil imports, and specifically energy imports, of Europe more expensive. It will therefore feed back into the fact that inflation in Europe will not disappear or even rise again. Because if our imports are dollarized and we have to buy those assets with a cheaper currency, with a weaker euro against the dollar, it will obviously have an inflationary effect on the currency. And because fundamentally, it is clear to us, a rate cut makes the euro more liquid, cheaper, more flexible, and the dollar more appreciated or more expensive. Even Cascaris last week of the Federal Reserve did not rule out even raising rates. So why do we want more? And it's a bearish relationship in the euro-dollar relationship, which, if we take a look at it in the long term, which is where we can really erase you watch, Sergio, the one that is coming. We have since 2008 touches in these zones of maximum year that always bring us, we have months, even a year and a half of downturns before us. And I believe that in this case, when this movement takes place, when this turnaround occurs, the fundamentals are justifying that the dollar is stronger than the euro. US bonds pay almost twice as much as European bonds. Capital is going to flow into the dollar out of the euro, more so if the ECB cuts rates ahead of the Fed. And therefore, the euro-dollar conversion rate will probably drop not only to parity, but below the 0 to 98 low reached in 2022.
And now, Gonzalo, when will the cuts be made? What date should we set for them? Because, of course, it seems, especially if this data is confirmed next month, which I think will be the key, that it is time for Jerome Powell to make a move. When and how many? I think that is the question. Aren't you with me? Yes.
Yes, indeed. First, you have to deal with a situation that practically borders on the ridiculous. That is to say, in December, they told us they were going to cut rates. Here, we insisted since December that they could not cut rates because the data did not support them to cut rates. We were very clear about that. And over time, look, one of the key reasons why we said that is because the inflation rate in the United States was zigzagging. And we have said it again and again. Since June, the US inflation rate has not fallen below 3%. And this was June of 2023. Since then, this is what the inflation rate has done. So, will Jerome Powell cut rates? He has to be very careful because 4 weeks ago, he has rectified everything he said in December. In other words, no, in the end, we cannot cut rates. But you did not know this before. We shared here in the closing of Wall Street Business TV that chart where he showed us that core inflation made up of the services sector had not changed practically nothing in all this time. And that of the 3 and a bit % recorded, 2.8 corresponded to services inflation. This was closely linked to the labor market because it is a labor-intensive sector, and as long as unemployment did not increase, there was no guarantee that inflation would decrease. We knew that. The Federal Reserve obviously also had to know that, And therefore, the announcement of possible rate cuts in 2024 was simply a dope, a pat on the back to feed a bull market that, based on those expectations, started to rise since then. And when are they going to cut rates? If things worked out, if inflation didn't pose a problem, if the US economy showed, as it is already starting to show, lower than expected growth, a slightly rising unemployment rate, today's retail sales that are worse than expected, all these steps bring us closer to the possibility of a rate cut. But we have to see this consolidate for at least 2 or 3 months. Otherwise, they will make fools of themselves again. In short, if the data between now and September are negative in terms of macroeconomic aspects in the United States, there may be a possibility that they will be encouraged to cut rates. In the meantime, I don't think it is possible.
Well, let's see what the Fed does now if Powell breathes, at least for this month, and especially if he doesn't get a good surprise next month, which would end with everything that has been achieved with this data. Thank you so much, Gonzalo, for being with us. A pleasure.
Thank you to you. Thank you,
Thank
Sergio.
you very
Take care.
much. Good day. We are going to do a short break, a few minutes, but do not go away because we continue with the best information in Negocios Television.